Ladies and gentlemen, we got him.
Can you hear me?
Yes. Sam? No, I'm joking. Yes, we can. How are you?
I'm doing well. How are you?
Very good. Thanks for joining me for this inaugural Twitter Spaces, hoping to make it a consistent Monday show, but it's always nice to start with such an awesome guest.
Always fun to talk to you.
It's a pleasure. You know what? I appreciate you're busy. Well, 10, 20 minutes, anything you've got is cool. I've got a few quick questions ready, some topics to discuss. It'd be great to get your opinion, and then,
Go for it.
Awesome. So I guess the first one, it'd be a bit of a waste not to talk about the market at all. Volatility quite low, prices comparatively to maybe where we're comfortable are lower as well. The dominant narrative appears to be kind of a de-risking out of China as a result of quite harsh regulatory conditions. And then following the decline, there's a willingness of someone to absorb a lot of the urgent selling, which is why we've kind of been stuck at around 30K. Is that narrative accurate? Do you find it compelling? What's your kind of macro view of what's happened in crypto over the past couple of months?
Yeah, I think that's sort of right. And I think the other thing is we saw a ton of liquidations on the crash down to 30K, probably 20 to 50 billion worth. And that obviously contributed to the downfall. Although before you go and blame leverage, remember that also contributed to the before then. And so, I think one way to think of it is crypto got to 40K and then people bought on leverage up to 60K and then it got liquidated, so it went back down to 40K. But that happened, and the liquidation is just over now. There's no one left to liquidate. So I think the liquidation stopped somewhere around 30K, which is sort of why you saw the sell pressure and the volatility and the volumes go down. And I think we're sort of in a holding pattern. People thought the institutions were coming, probably correctly, sometime in the next year or two. So they bought, crypto up, to 60K, Bitcoin up 60K, sort of in anticipation of that. And unfortunately did not last until the institutions actually came. They got liquidated first. And now I think it's people are still waiting, for the institutions to come. And they're still probably going to come, but, sometime over the next few years. And then you've got this absolute fucking barrage of bad headlines, which I think is just people piling on, because this is the good time PR-wise, to shit on Bitcoin, right? When it's going down, you get people praising you for shitting on Bitcoin. When it's going up, people tear you apart if you try and shit on Bitcoin. And so I think all the governments that had negative things they want to announce about crypto were now is the chance. I think that probably includes China.
Is that a good thing? As in, you might as well get all the barrage of FUDs all in at once, get everyone to pile on and sort of get it over with, to sort of rip the Band-Aid off type of approach to the market. Could that be a net benefit?
So I think there's an aspect of it that is a net benefit. There's also a cost, which is that generally, good things happening sooner is good, and bad things happening sooner is bad. There's just momentum in the world. And so, if you can, sustain a lack of bad news for longer, I think that's just net good. Although I think it's slightly lessened by the fact that, the 12th negative China headline in a week sort of just bounces off of people.
So over time, as traders, one of the things that a few of myself and my colleagues like to look at is the relative impact of news. So you remember probably just a few weeks ago, any fart out of China would send this market down 5, 10%, whatever. Yep. And it's been getting a bit softer, so people are maybe more used to it or pricing it in. That's kind of a good sign, right?
I mean, or anyone who's going to sell because of China FUD has sold. They're out of Bitcoin to sell.
The sellers have run out of tokens. That's a good thing to hear. Or running out of tokens. We don't really know the extent.
Yeah, I think that's mostly right.
Okay. We mentioned the institutional narrative that drove us up. One of the interesting things has been the retail participation in the market. And given how widely, the proliferation of stable coins and fiat on-ramps look totally different than they did just a few years ago, we saw a lot of retail trading in the meme coins, in the dog coins, in BSC, the traditional route of buying Bitcoin and then trading altcoins through that proxy. That seems to have been expired a little bit. When you mentioned that, everyone's who's been liquidated on the retail side, there's no one left to liquidate, which is a quote that I quite like. That said, there's normal indicators that we use as kind of proxies for retail participation, like Dogecoin, meme coins, etc. And volumes generally, as you'll know, as an exchange CEO, those have kind of dropped, flattened out, whatever. Is it fair to say that retail's kind of dead? And then, if so, what do you think will them back? Will get them back? Do we even need retail?
So, I mean, I think it's all relative, right? Like, how dead is retail? If you fast backwards by like 10 months, right? And I tell you, like, today, there's been about $100 billion of global crypto volume. Bitcoin's trading at 33K. How does that make you feel about retail participation? Like, probably you're like, holy shit, retail's going bananas, right? And so I still think there's massive retail participation compared to last year. On the other hand, if you compare this to 2 months ago, and I told you that, you'd be like, what happened to markets? They seem dead. And so it's all relative. But yeah, I mean, retail is less enthused. I think that like retail felt invincible, and now it doesn't. And so I think there's sort of like a little bit of recalibration. And a lot of people were kind of like, I don't know, trying to figure out what their plan is with crypto. But one thing that I will say is like, during the height of the 2017 bull run, you walk on the streets and you see two people talking. They're probably talking about Bitcoin, right? Then you fast forward to 2018, 2019, they're not talking about Bitcoin, right? They're talking about like Taylor Swift or something. It's not going to be Bitcoin. Like, no one was talking about that anymore, really. You go to the bull run in early 2021. Again, you see two people talking on the streets. They're talking about, well, maybe it's Dogecoin, but they're talking about crypto, probably. I mean, maybe you get unlucky and it's like Wall Street Bets or like, AMC or Elon Musk, but probably it's crypto. Now you go on the streets, post sort of like 2021 crash, and you see two people talking. I actually still think they might be talking about crypto. And I think that's quite a bit different than like 2017, 2018. Like, the amount of attention that the world is placing on crypto is still absolutely massive right now. And it's died down a little bit from the peak, but it is still so much higher than it was sort of post-crash, 2018.
Yeah, 2 steps forward, 1 step back. I think that sense of,
as
we're all stuck here staring at like $100 range, I think the sense of perspective is very much welcome. I want to take it back a little bit and zoom out from the cycle stuff that has happened recently, and kind of ask, in terms of just volatility more generally, if you had to put your trading hat back on, do you have any kind of potential catalysts or narratives in your peripheral vision that could be the cause to take us out of these conditions we have now? Things are really tight, really slow. I think a lot of traders are waiting for the big move. Anything on your radar that might catalyze for that, or will be used as the explanation after the move, as it always is?
Yeah, so if institutions actually come in, right, like, it may be slow, but like, if institutions are going to buy like $500 billion of crypto, like, that absolutely would do it. So if you see institutions actually coming in, like, that would absolutely do this. Regulatory clarity could do this. I think CFTC or SEC regulatory clarity would have a big positive impact on the market. So I think that's sort of like another piece of this. I think that like seeing crypto, like, for all the strides that crypto has made, like, I don't know, name a place crypto is used that isn't in order to trade crypto.
Good question.
Right. There sort of isn't any yet. Right. And we've done so much as an industry, but we haven't quite gotten beyond a circle jerk in some ways. And, I think we're close, but I think if we get there, that will also be potentially huge, right? The first time that people are like, wow, crypto is now, it's here, as opposed to like being able to dismiss it as entirely just a circle jerk. So I think that's another thing that could sort of like, lead to another bull run. I think that like, more monetary inflation could. But honestly, like, who are we kidding ourselves? Like, if Elon tweets a heart and then a Bitcoin logo, that's what actually is going to do it.
Great. You got your list of entry signals there for those listing, or at least things to look out for. I want to actually follow up on the post-circle jerk crypto era and ask about FTX more broadly, because you guys have been busy, right? and you personally have a lot of different hats for this market. So there's like FTX DeFi, which is kind of you, Solana, Serum, that whole ecosystem and your intimate involvement there. There's then FTX and traditional sports with Sam Tom Brady, the stadium in Miami. There's a lot going on. There's FTX esports as well with the TSM partnership. Like clearly FTX is much more, or building to be much more than a place where I go to lose money trading the Bitcoin perpetual swap, right? So all of those factors put together, is there some grand unifying theory or vision that ties all those things together?
Yeah, the goal is to make it a place where you make money trading the Bitcoin quarterly futures. No. There's a few of these. And, one of these is sort of the one which we have been biggest on historically, which is basically an exchange, a crypto ecosystem for power users. Like, if you had to name like what is like the core FTX demographic, it's crypto traders who really care about their product a lot. There's just that continuing throughout, which is the most important and also most boring answer. If you put that aside for a second, though, what else is going on? One of them is growing out the set of asset classes. So, obviously we've listed stocks internationally, and I think there's more to come, both in the U.S. and out of the U.S. Another piece is filling in some gigantic holes right now that like the space has, and I maybe won't be super specific about those, but I think people would probably take some guesses about what the biggest sort of like white whales are. And then I think another one is regulatory clarity and licensing. We are doing everything we can to get every license we can, basically. And there's sort of a dearth of them available in some sense, but there's a lot of countries, so it can still keep us pretty busy. Basically what we're doing is we're looking at an ecosystem where very few jurisdictions have licenses or regulatory frameworks yet for crypto derivatives. And our sort of approach is, look, let's do the best we can. Let's get any country that comes out with a license, we want to get it. We want to like signal that like we are super excited about that, right? And we will go get that. And like if they do their part, we'll do our part. That's a big task. Interfacing with jurisdictions that don't have licenses yet and talking about what their plans are, if we can be of use there. We'd be happy to help build something like that out. And so that's sort of like, another piece of this. Another piece is looking at what Blockfolio has been and what it could be. And without going into too many details, I will just say that like, I feel like many fintech apps are not nearly ambitious enough. And that like, what passes for a fintech app is like, a mobile app that lets you like buy S&P 500 stocks with your credit card. And like, that's pretty cool. A lot of people want to do that. That's like, 5% of the space of things people want to do. And then you go download a second mobile app, in order to send money to your friends who happen to have that exact mobile app. Which that's also useful, but that's another 5%. And you've already forgotten your password, right, to your first mobile app. And so, I think that there's a lot of room to build a more comprehensive product. And that's, on the consumer side. And that's something that we've been charging forward to as well. And that, I think could be pretty exciting. And then the last thing that I will say here is, when we built FTX, one of the core principles, and this is, I say this as if this is something to be super proud of, but like, we're not the only ones who did this. BitMEX actually pioneered this, although weirdly many exchanges did not follow, which is everything that you can do via API. It's like FTX.com is basically just a GUI wrapper that we built on the FTX API. What that means is like, can you white label FTX? Like, absolutely. We've done it, right? We've built a lot of FTX white labels. FTX.com, the FTX Pro mobile app, Blockfolio, like those are all just FTX white labels, right? And in some sense, and that means that others could do it too. And so we built out sort of docs specific to doing that. And then we built out a few products. FTX Pay is one of them. The FTX white label program is one of them. NFTs is one of them. Secretly, these are all the same product. secretly, these are all just another way of saying that FTX has an API that you can call in order to build FTX into your product. But with like different formulations, different phrasings, different default widgets and GUIs to emphasize different parts. FTX Pay is just the FTX API, but like putting all of the wallet related things in bold and all the trading related things in like small fine print at the end. And, like different, the FTX white label is like emphasizing the trading more, but they're all sort of the same thing. And the goal here is like, there's actually a lot of businesses that want crypto support and don't have it. And we have support for like everything there is to do basically in crypto. And it's all already done by API. And so like, if you are a neo-broker and you do stocks and you want to do crypto, like it's super easy to just like add crypto using our API. And that's what the white label is. And if you're a website and you want to take crypto and fiat-based payments, well, we already take crypto and fiat-based payments on FTX for deposits for users. So you just become an FTX user and take it, and that's what FTX Pay is at its heart. And so that's sort of another product area that we've been building out, a lot. And so I think like high level, what does this mean? It means continuing to just further build out the, power user, product, making the consumer, retail consumer product suite more complete, working on regulatory and licensing, and working on white label, support are sort of four big pillars that we've been pushing, product-wise.
That's a very awesome, complete answer. I, for one, can't wait to get my FTX groceries delivered by FTX van into my FTX home and to put them into my FTX fridge. That'll be I think, just around the corner at the rate you guys are building.
Piece by piece. I think we're going to do the refrigerators first. That seems like the core competency.
Yeah, priorities. I agree. Just two more very quick questions, and you've been very generous with the time, for which I'm grateful. As a quick follow-up on one of the points there, was about the regulatory landscape. So, the main one in the headlines, of course, been China, but we have seen, for example, Binance in many headlines, in Western media.
Yep.
The UK has been kind of giving them a slap on the wrist, and a few other authorities have kind of followed up. Is the regulatory landscape constructive generally? What kind of conversations are you having? What are the main risks? Is there kind of an open-mindedness that wasn't there previously?
It's, okay, so the change, to the extent there's a change, it's that, countries have started giving up on ignoring crypto. Like, for a while, people were kind of like, I don't know. This seems like a lot of work to regulate and license. And, like, we got a lot on our plate. Like, there's fucking COVID and shit. Like, I don't know. I kind of don't want to focus on this right now. And I think crypto just got big enough over the last year that lots and lots of governments are just like, all right, like, we tried, but no, crypto is going to be big. It's going to be here to stay. And it's going to be big enough that we need to deal with it. And that's not necessarily a good or a bad thing, for crypto, although I think it's a good thing for the world. But for current crypto companies, it's a double-edged sword. On the one hand, it means like there's going to be a lot more of dealing with regulators. On the other hand, it means that hopefully there's going to be a lot more support from regulators, in terms of being able to give regulatory clarity and licensing. And so that's been the big move. It's been basically replacing like, unregulated with licensed. And that it means a lot of work, but it also means a long-term healthier and clearer ecosystem. And you asked like, are regulators friendly or unfriendly? There are some regulators who are very friendly and some who are very unfriendly. Like some of them clearly just have positions on this. But most of them don't. Most regulators don't come at this from the perspective of like, my goal is to help crypto or my goal is to dismantle crypto. Most of them come at this from the perspective of like, there are various things that we need to make sure happen or don't happen. And that's my goal. And, if they can do that in a cooperative way with industry, that's great. And that's their first choice. If industry will not cooperate with them or if they don't think industry will, then they'll do it in a non-cooperative way with industry. And those are sort of like, these are very, very different when you're on the industry side, right? It feels like hot and cold. But in fact, from the regulator's perspective, it's a coherent perspective, right? Because what they're thinking is just like, look, we need to make sure that people aren't laundering lots of money through crypto. That's our goal. We're going to do whatever it takes to get there. I'm like, you keep saying like, what the fuck? Like, you're like trying to leave us alone then. Now you're like intervening. Now you have this like, what's up with all this stuff? I'm like, look, all I'm trying to do is stop money laundering. And like, when there's no money laundering, it didn't bother me. And when it seemed like there was money laundering, I had to intervene. And like, I could license it and require you to do things. I would just sue you. Like, I don't know, there are like lots of things that you could do to try and make that happen. And, you know, from the regulator's perspective, it's like, I don't know, which is the right tool for this, right? Like, can you get it done in a cooperative way? If so, that's ideal. And if not, then you get it done in a non-cooperative way. And so I think that like, you know, practically that's sort of where they're coming from, and it's not a crazy place to come from. I think it's incumbent on us as the industry, to set the stage such that it's cooperative, right? To give like, to be cooperative, to give positive feedback on cooperative things, and to make the non-cooperative approaches unnecessary, right? Like, regulators will generally start by reaching out and saying, hey, you're doing this thing. We don't like this thing. Here's why we don't like it. And, you know, if you respond like, oh, thank you for telling me, we will stop this in the next 12 hours. You know, if you have more color, always love to hear it and be responsive. Then, you know, they're going to feel, pretty good about not needing to sue everyone. They're going to feel like, you know, the industry is being responsive and professional. You know, if you respond by not responding and ignoring them, or like fighting it real hard when it doesn't really make sense to fight it, and when you're not going to win that fight, or by like stalling or, you know, doing other things that they see as like, you know, getting in the way of their attempts to do what they need to do, then they're going to be like, all right, I tried the nice approach. That was not succeeding in stopping the money laundering. Now I'm going to sue you. Right? It's like, and that's sort of like a high level thing. And so like our job as industry is to make that cooperative dynamic work. So, you know, no one has to resort to the non-cooperative one.
Yeah, that's an awesome perspective and very useful to present the case from their point of view as well, which I don't think we talk about enough.
Yeah, I think that's right. And like, you know, like it or hate it, and I think it's whatever. I think probably the honest answer is that it's somewhat reasonable. Like, sometimes it's completely on point and important. Sometimes it's just an overreach. I don't know if there's a spectrum. But, you know, the way that we're going to be able to work together and have success is if we understand what the other cares about and are respectful of that. And, you know, if we're not, then like, you can just sort of play out with how that's going to end. And it's not the way you want. And I think that this sort of cuts it against a narrative that a lot of people implicitly assume, which is that like, you get in trouble if you do the illegal things all the time because you chose to be an illegal company. And if you choose to be a legal company, you never get in trouble. And the truth is like, it's not like one decision. Like, it's 1,000. And sometimes it's clear, occasionally it's not. And, you know, it's like being a good actor in the regulatory space it's an iterative game that you play again and again and again. And you have to make judgment call after judgment call after judgment call. And you have to be on top of what 200 people are kind of implying with what they say. And, you know, the devil's in the details here. And, you know, doing a good job of that in sort of a reasonable common sense way is like incredibly valuable, and doing an unreasonable job of it is incredibly destructive. And, you know, you can come at this from the perspective of, I want to build the legal compliant company. But if you do like an unreasonable job of interacting with all the details, you're not going to have good relationships with regulators. You're not going to be compliant because compliance is about the details sometimes.
Awesome. Yeah, very rich answer there. Thanks for that. I'm really keen to see how the regulatory landscape develops.
Yeah.
I think with a lot of stuff we've discussed, it long term seems to be kind of positive, or at least open and constructive. I hope that sticks around. So I've been super generous with the time. One final kind of almost meme question before I let you trash your opponents in league. You mentioned the market moved a lot, which it did, obviously, and the sense of perspective there is important. Did you trade any of it yourself? Did you like buy anything, sell, rebalance? Is there a kind of SAM fund which outperformed everyone? Did you kind of play around with any dials?
So I mean, Alameda exists, and you can call that a SAM fund if you want, but I don't actively trade it. You know, there are other people who do that. You know, it's been a while since I've been, you know, spending my days trading. So, you know, did Alameda trade? Yeah. Was I the one doing it? Nope. But you know, I think that like, all that being said, like, I think that there are some good trades to do. And I think that there are some interesting trades to do. And I think that like when everything's crapping out, I don't know, fuck all your models, right? None of your models make sense anymore. Your models were trained on like, if Bitcoin's up 2% today, how much should Uni be up? And if Bitcoin's down 50% today, like, who knows what should happen to Uni? It's sort of not even the same type of question, right? And you just have to think like, what's the space going to look like over the next year? You know, when this is over, are people going to feel like, oh, that coin was dumb, glad that one crashed? Or are they going to feel like, wow, people got to buy it at that price? That's amazing. And so I think like one thing I think about is like, is this like a really important part of the space? Is this a really exciting project, right? If so, then maybe it just gets oversold, right? And buying it on the dip is just good. If it was always like hyped up and inflated and complete vaporware and people are going to give up on it eventually, right? And then it crashes a lot, I don't know. Maybe we're just going to keep crashing more. Like maybe the party's over for that coin. And so I think, you know, that's sort of like one thing I think about is like, you know, is this crash the end of the meme or is it like overselling a valuable asset?
That's a great answer. Yeah, it's always nice to have a framework for when the market does stuff like this. And, you know, we've spoken to a few people on like our podcast and stuff, even like the very quantitative guys. It seems like when crypto just really craps itself, we all kind of become cavemen to some extent and go back to first principles and start hitting rocks against each other when the models go out the window.
Oh, absolutely. Absolutely, right? Like, and it's almost hard not to. I mean, it's worth so much positive or negative, to get that right or wrong that everyone's going to do it.
Feels good, man. All right, Sam, thanks a bunch for your time. You've been very generous, and I'm sure we very much enjoyed your answers. Feel free to pop by whenever on Monday. Any other days, we'd love to have you back. And I'll leave you to your one-sided destruction of your opponents.
Yeah, ping me ping me sometime and I'll hop on.
Happily. Thanks, Sam. Take care.
All right, thank you.